Welcome to That Backyard Property Podcast. I'm your host, Michael Killiner, and I'm a father, a husband, and a mortgage broker. Our goal is to inspire, educate, and empower people through property. Whether you're a first home buyer, whether you're looking to upgrade or downsize or invest in property, then we're here to help you. Each week, we'll have a special guest that's an expert in their field, and they'll guide us through all of your questions that you might have, plus a lot of other information. So let's do this. Welcome back to another episode of That Backyard Property Podcast. Today, I'm super pumped about this one. We have one of the most experienced, knowledgeable mortgage brokers in WA, but I would put him up there as one of the best in the country as well. Adam Donald, director, mortgage broker, father, husband, Capita Finance. Welcome.
Thank you for having me. Very excited. Nervous, I don't know why, but yeah.
Yeah, it's one of those funny ones where I was just saying before, I wrote down the people that I would love to get on, and you were right at the top of the list because I have always found you authentic, but very knowledgeable in the space.
Thank you.
And there's plenty for you to share.
Yeah. Well, hopefully I can, give some insight as to what I do. And, well, you know me well enough, I hope to know that I'm going to be pretty candid and forthright with what I think and say. So
yeah, I think that's probably one of the main reasons because I was like, Adam's going to say what it is.
Yeah.
There's no sugarcoating it. And that's the best part. So I usually start off, and we will today, around the notion of home. You obviously help so many people into their own homes, whether that be their first, second, whatever it might be in investment properties. But for you personally, tell me or take me back to whether it's your first home that you bought, whether it's your first home your family were in. What does home mean to you?
I think probably the one I'm in at the minute. Yeah. We had our son 3 years ago, COVID. I think do you have your second one?
Yeah, you end up being right in the middle of the two of mine.
Yeah, okay. So yeah, COVID baby, no help. It was hard. Like our family was there, but I think we bought our son back into our Killiner property, which is a huge thing, bringing your child into your first home. But this one in particular, we sold that home for a plethora of reasons, too many stairs or this and that. It was a beautiful home. Don't get me wrong. We're very fortunate, but we didn't see ourselves there long term with a young child. Yeah. And this home we bought and we sold, and it happened really quickly, market, the way it is. We sold last year, and, my wife and I had the worst seller's remorse. Like bad, right? Yeah. So, we're panicking. We bought our child here. We own our home. Like, this is fine and all that. And then we ended up having to do it because as a mortgage broker, you can't get declined on your own finance. And, and look, we had this buyer's, but we ended up pulling the trigger on a full renovation, and now it's designed perfectly how we want to raise our son and have a life there. So that's probably the home that I really consider, my first proper home. My first bachelor pad was just a bachelor pad. So a lot of silver and black everywhere.
Not much furniture.
Whatever I could get, right? It was all going back to beer. So no, it was, family home. We moved. My parents were very, they were awesome. Like were never left wanting. And so, we grew up really in lovely homes and just that kind of stuff.
Yeah, it's love. We'll talk about your parent, or your mum in particular, a bit later because she's such a major part of the business. But in terms of the home, is there something about where you are now that you can see your son growing up in, and like it's going to be the memories that you create for him is something that he will have through his life?
Yeah, my wife tells me about it. I'm not very sentimental, or I can't remember a lot of my childhood, but because we had a little bit of buyer's seller's remorse, we gutted it, this house, and it is made to how we want it, right? And, there's a pool, there's, it's flat, it's warm. And I think those core memories for him as a kid, he's going to be able to have them there now. The school catchment, I know these things happen you may or not have kids if you're listening, but that is a huge thing for us. So, all these things, being able to walk to school and walk home, and, that's what it's all about. So just the warmth, especially what my wife has kind of made it. Like, the house is just, it flows well. It's just got everything that we need. And, it's not, opulent or over the top. It's just, nice little
what
home.
you need.
Nice little home in Guelph. That's all we need. So, yeah.
And then because you navigated that buying and selling in the same market, what was that? If you take away the buyer's remorse, how did you do that? How did you manage that? Because you were right in you can see it all happening because of what you do. So
correct. Yeah. So look, we bought really well in Killiner and did a reno. So made some pretty good money on it. But we weren't moving to go up. So, I see a lot of people who are in townhouses trying to get up from their 300 square meters, try and raise a family kind of situation. So we had that luxury of being able to go sideways to a point, which, didn't have to compete in, $3 million markets and all that kind of stuff. So, we were able to buy first, long settlement, delay it, and then be able to sell our house with a long settlement as well, but have a period of about 3 weeks where we crossed over, where we owned both. Yep. And that allowed us to get our house ready to sell and move, with a bit of buyer's remorse, leave our home with time, not just, that's it, you're out, So that's how we kind of did it. The buying process at that time was hectic because we went to this home open on a Sunday. Yeah. It was 11 o'clock. We were out of there by 11:15. You know what home opens are like. So you go.
Were you already looking to buy, or this was we saw the sign, we were like, oh, let's have a sticky beak?
Nothing fit our bill, right? It had to be single story, 800 square meters in a certain area, so we were very specific. We'd gone to home opens, but nothing really ticked it. And then, so we went to this house, 10, 15 minutes we were in there. There were 100 groups there, like 100 groups through the home open, and it's, if there's about 20 groups there, it's going to sell, right? Yeah. I saw value at about 1.4-ish. The agent called me an hour after the thing and said, hate to do this, because I obviously know the agent, hate to do this, but there's a Sydney offer. It's cash, got to present it. The issue is it's got a 7-hour clause on it. I've gone, ugh. Okay.
7-hour clause?
Yeah, so there's a Sydney guy where they're coming in. He's, I think he's coming in at 1.5, trying to bully out everyone at the market, which, in Sydney, 1.5 is pocket change.
That's an apartment.
Yeah, for 40 square meters.
Yeah.
So, I said, yep, agent, I won't say names, but I said, look, just make sure I'm the last call, which is I always try to coach my clients to try and be that last call so you can kind of work out whether you want to go up. Because, agents can't legally give you the answers, but you can try and feel them out a bit, right? Got the last call. Will this do it? No. Will this do it? No. Will this do it? No. And I went up, I don't know, I think from my original offer went up about 150 in 7 hours, but I wanted it, right? Like it ticked all the boxes. So, I really try and hit home with my clients as well in that kind of space and just say, look, if you love it, go for it. Like if you see yourself in there for the next 10 years, what's 10, 20 grand over that 10 years? If the fear of missing out on that property, if you see your family being raised there or your first home or whatever that might be, you got to go for it. So.
Yeah, and you would have seen this countless times over the last 2 years, especially where people have been in the market ready to buy and they're not willing to pay a certain price, and they're almost chasing the market up rather than offering that bit more to secure the property, and they're still probably looking 12, 18 months later, and the market has beaten where they're at. Yeah. Have you seen that a fair bit?
So it happens everywhere. So when I started a long time ago, but for example, being, let's say, north of the river, right, in Perth. So people in Hammersley are trying to buy in Careen. People in Careen are trying to buy in North Beach. Yeah. Now it's people who are trying to buy in North Beach have to buy in Careen. The people in Careen have to buy in Hammersley, right? Yeah. It's just how the market is. Yeah. And, people say, oh, it's really expensive here, really expensive. I go, is it though? Like, it's not that expensive. You go over east and, you spend the money that you spend to move to Careen in Sydney. Like we're talking $4 or $5 million, right? Yep. So what I tell people, I go, okay, you're approved for X. Let's say that's 600,000. You see value on this property at 550. You've got the 6. You've got to pick your line in the sand with any property. But I will always say, I try and coach them at the start to say, look, just go for it. Because if it goes over what you're prepared to pay, it doesn't matter, move on. There'll be another. Yeah. But it's about them getting, even if they do miss out, getting in that mindset of going, okay, well, it's not like it used to be. You know, it's not like I get to offer 50 grand more and I get to negotiate. Like a lot of these are set date sales. It's your final and best. And, you know, clients will call me and they didn't call me for a count. I go, well, did they tell you that they were? Like, you got to be brutal. And, you know, because home ownership is just, you know, coming from, you know, I'm born 83, like the boomer mentality, own your home, no debt. Own your home, no debt. Yeah, they've got to buy the houses at 50 grand and all that kind of stuff, you know. And I've heard it all before, 80, 90% in the late 80s. I get it, right? Yeah. But we've been brought up with this mentality of paying off the debt and owning your home, especially in Australia, right? It's just home ownership is the pinnacle. Yeah. Like it is, you know, it's shelter, which is, you know, one of the things that you need to live and survive. So, you know, people strive to get it in Australia. And look, don't get me wrong, it is expensive to buy in Australia because of the quality of life, you know, free healthcare, education, all that kind of stuff. But, you know, looking back at it, I just always want to know that all my clients have been told, look, just go for it because you're going to miss the boat. Because if you don't buy it, in 6 months' time, it could be 50 grand more. Yeah. And then you're still competing. You're going out a suburb or going down in size and all that kind of stuff.
Yeah. And it's funny listening to you talk about that because I can just imagine any buyer calling you and you instilling with them confidence, knowledge as well, but confidence to actually act on that purchase. Yeah. And there's all too many times you kind of hear people go, well, I was told no, or I was told I couldn't do it, or whatever it might be. And I can just imagine someone calling you and you being quite confident, realistic, but confident. Do you think that's something that...
Yeah, I tell you would know. You repeat yourself a lot in our job, right? The same thing. So I have 4 simple rules. Who's going to lend you the most amount of money, cheapest rate, least amount of fees, but most importantly, who's going to approve it? The first 3 mean nothing if it doesn't get approved, right? But I always tell clients as well, like, you know, as I was saying, my real estate 101, it's, you know, I give them this confidence, go for it. But they got to remember they're the money. They can buy any house. That agent can only sell them that one, right? So just because they're selling the property doesn't mean they get to dictate everything, right? Saying that, the seller doesn't need to sell them at the price that they're offering. But my point is everyone comes together on the contract. If they can bring it together, clients of mine just want to know confidence. Right? And a lot of agents, and I deal with a lot of agents, there's been a shift where the broker's kind of more in control of it all. Well, I know I am in my things. So
absolutely.
Yeah, and because the money is everything, right? 10 grand to a seller is a lot of money. 10 grand to the buyer is a lot of money. 10 grand to the agent, 2.5% is $250, means nothing to them, right? So they just want it gone and moved on so they don't have to go to the home open again. But from a buyer's point of view, they just want to have that confidence because having the money set aside, buying the house is the fun part. 30 years of debt that comes with it sucks, but I'll deal with that, right? So, and that's what I tell people. I go, just know that if you buy that house, you're getting it. And I'm also a big advocate, and what I probably do, I don't know if you do it, but I try and tell all my colleagues to do it, is I'm pretty heavy with not price negotiation, but information prior with the agent to instill that confidence that if their offer is accepted, it's done. Yeah. A lot of agents around town know me. If I say it's done, right? And it is one of those things where agents don't like to call their seller and say, hey, we've got to go back to market because they haven't done their due diligence and all that kind of stuff. So.
And the biggest reason that happens is finance. That's
every
the biggest
time.
reason. And you're absolutely right. And you can almost hear it in an agent when they are calling you.
Yeah.
The fear of, well, I hope you say that it's going to be done because...
Because it's the best offer.
Yeah.
Because I really need this commission. And I don't want to have to deal with this ever again.
Yeah. I really, really need it. What are you seeing in terms of trends within the market? Like, what are you seeing from, not necessarily predicting anything, just what are you seeing?
I am getting refinance. From a current situation, you know, I'm probably 60% purchase, 40% refi at the minute. A lot of people refinancing to cheaper rates still, but most of my clients are upsizers, I would say a lot. I've got a lot of, I've got a big book, so, I've got a lot of clients refinancing. However, I'm finding that existing banks are pricing them well enough to keep them, which is, it's whether you churn or not, it's one of these things. But ideally, in my position, when the book's the size that it is, I'd prefer them to just get the better rate and stay where they are because I've got enough business to deal with.
And a lot of the time, the only way for them to do it is by threatening to leave.
Correct, yeah. Or even, and that's the pits of it, is when you do the application, they said that they're not going to do anything, and then you do it, and then right at the end they go, oh, we're going to offer you this. And you've done everything right at a bank, and then one of the majors or one of the smaller banks go, yeah, we're going to give you this rate. And the client calls you, what would you do? And I go, well, I wouldn't change either. And and there's a cost to the business. That's all part of it. So I don't get worked up on it, but I find that my clients having that conversation about what would you do, I'll always tell them what I would do because they respect it. And it's always 99% of the time it's about saving cash and ease. Yeah. And people say to me, who are you with? I go, well, I'm with Commonwealth Bank. And they go, oh, okay. What rate are you on? I go, worse than yours. And they go, what do you mean? I go, I'm a mortgage broker. I don't do my own loan. The last thing I want to think about when I get home. Yeah. But, gone are the days of shaking Bob's hand down at the branch. You're a number like everyone else. And, I gave Commonwealth Bank $40 million last year and my rate's worse than yours. You think that's fair? And they go, no, that's not fair. I go, exactly. Everyone, it is what it is.
Yeah, so. the classic, I've been with Bank A, B or C for 20 years. Yeah. Surely they can give me something better.
Oh, I remember when Bank West was R&I and I go, okay. I get it. I like loyalty. Don't get me wrong. I don't leave Commonwealth Bank because of my accounts. The hassle of changing payrolls and all that kind of stuff is just, it's not worth the hassle for the extra. But again, some people chase rate, some people chase offset, some people chase no fees. There's all variables. The cheapest rate is not necessarily the best option for a client, right? It's are you self-employed? Do you need multiple offsets so you can park money? There's heaps of different things that you can work through.
Yeah, and that's what I was going to say about refinancing. It's spoken about a lot. People tend to not actually understand the reasons why someone might do it. What do you, as I said, about 40% is refinancing. What are you finding? They're obviously chasing rate, but why else would someone refinance?
I find that a lot of clients, especially in the mining sector, are getting put on ABNs. So parking money individually is a huge, in buckets, if you've read The Barefoot Investor or whatever that might be, as every client seems to. But, being able to park money for multiple offsets, so certain banks will only have one, whereas you could go to a lender which has the multiple, you could park their tax and BAS, so it's all itemized, they don't spend it. You can find that a lot of self-employed people, especially that come out of a trade, they don't teach that in TAFE. If they did one half day of saying, hey, you're getting this needs to be put away for tax, don't go buy a HSV ute straight away. And look, if I was 18, I would do it too, but you just need to be taught that, and being able to bucket your money and try and help your clients segment certain dollars so they're not getting a tax bill or, overspending and all that. So, because at the end of the day, you can go buy the car, but if you don't have the garage to put the car in, what's the point?
What's the point? And I guess you probably see with those same type of people that they come to you and say, hey, I earn X. Yeah. You see full tax returns and full details, and you realize, actually, what's being presented to the tax office is Y. Yeah. That's actually, in most cases, what the bank will be using. Yeah. Do you find there's a bit of disconnect with people's understanding of what income they're actually getting?
Yeah, I think self-employed in particular. Yeah. Yes, I earn gross, but it's the net profit, right? So, as I explain to clients, whatever you tell the ATO is what the bank is going to use. If it's good enough for the Australian government, it's good enough for the bank. That's how I explain it, right? And people go, oh yeah, but my accountant, I know your accountant said that. I would be saying the same thing or wanting to hear that same thing. But it's all about, especially in this time of year as well, clients will come, but self-employed, and I'll go, look, 2024, you've done it, it's done. You can't go back on it. So I can guide you as to what that be. Oh, but I'm going to pay this amount of tax. I go, well, do you want to own a home? That's it. It might hurt to pay a bit of tax, but $500 a week on rent, which is cheap at the minute, is 26 grand a year in dead money, which could be paid into your own mortgage. PAYG people, some don't know whether their income is their package where it's inclusive of super, or what's another one? I don't know. I just know what gets paid into my bank account. And that's fair enough too. Like, because that's all that matters to a lot of people.
Yeah. And I guess touching on that self-employed, no doubt you would deal with a lot of self-employed clients. The common consensus is that it's more difficult to get a loan if you're self-employed. It comes up a lot because they don't quite understand the differences between all the banks. With that, I guess what I was going to say is, where do you find the value in terms of sending a client to a certain bank for a self-employed applicant? Have there been changes recently in the industry? Like, what do you find probably the bank you'd use, or what you're telling those people?
Yeah, great question. Yes, there are certain banks that are better, and they say that, right? Like, some of the majors are really good. It's all about understanding what the business is as well. I do a bit with NAB. They're pretty good with that kind of space. Going self-employed, I think it's become a lot more lenient over the last 18 months, 24 months. They've come to market, a lot of these banks realizing, especially, as I said earlier, the mining sector, a lot of people are putting people on ABNs or, companies, whether that's right or wrong with supers and all that. It doesn't matter to me, right? I get the pay slips or the tax return. That's what I lend against. So, it's about, people just need to understand if they're going to go down that path. Well, if they're going as a company, can they pay themselves a wage? Or if you're going to go fully self-employed as a sole trader, you might have to wait 18 months until you've got some time behind you, because, self-employed, it's all on historical figures. Oh, but I'm earning X this year. Well, when you give me a tax return saying that, that's what it is. But I don't want to pay tax. Well, it's this catch-22. And as I tell every self-employed person, I'd be the exact same as you. I don't want to pay tax. I'm self-employed. I don't want to pay tax. But you earn money, you got to pay tax. And if you want to buy a house, you need taxable income. So,
yeah. And I guess one of those other myths, and I raised this earlier when we were chatting, is one thing I find people really confused around is lender's mortgage insurance and needing 20% deposit to be able to buy your first home. And as prices have increased, 600K, 120,000 plus stamp duty, people going, I'm not going to get there for another 10, 15 years, if that. What are your thoughts on mortgage insurance? And
look, it's a scam. But no, there's a lot of places around the world where, especially, Australia has a immigration policy, whether you like it or not. Like, I'm a big fan of it because it's great for our industry and my industry, and these things don't happen around the world. And here, yes, I understand banks are secured, but it's just part of it. Right, it is what it is. I've paid it twice. I'm a mortgage broker. It's unavoidable sometimes, right? Unless you got bank of mum and dad or a guarantor or something like that. So, I do believe that the thresholds here, need to be looked at from assessed constantly from the government, especially with the home guarantee scheme. 600,000's hard. Like, you're in fringes. The land and the house and land packages, you can't even do it these days. So, saying that, if you can avoid it, I would. But honestly, getting into a home, it's just part of the process. Like, there's not many people that can save 145 grand for a $600,000 house to avoid it. So there's banks, if you can save, more you save, the easier it is, cheaper the rates, cheaper the cost. But it is what it is. I'm doing one at the minute, 97%. They're buying a house and land package for 750 grand. It's $30,000 in mortgage insurance, right? They don't have to, they're coming up with around 60. That's half of what they're coming up with, but that's the cost. They just want into a home. They want to raise a family at some point. And if that's the situation that they're in, it is what it is. And people understand that, and, you have key start limitations and, these government funded banks and that. But I'm just saying, I tell people, look, if you can get into anything at the minute, great. Because the bank, obviously, is never wanting to end up on today, tonight, right? So they assess it and stress test it. So if they can say you can afford it, you can afford it. It's just whether you want to pay it.
Correct. Yeah. And I guess it's a really hard one in terms of the context of where we are in the property market. that someone that paid mortgage insurance and borrowed at 97 or 95% 18 months, 2 years ago, is now probably under that 80%.
Great for refinancing though, right?
Right.
So, So, absolutely. And, and that's a hard pill to swallow when you've maybe forked out 20 grand and in 18 months to 24 months, you didn't have to pay it.
Yeah.
But then you wouldn't have had the extra 20% equity either, right? Like, so, COVID and COVID was a once in a lifetime, right? So, as I said earlier, the 18-90% boomer mentality in the late 80s, like the amount of times I've heard that, but in 20 years' time, we're the generation that's going to go, I remember when rates were 1%, 2%, like it will never happen again. Like, unless something cataclysmic happens, but it normally goes the opposite way, like hyperinflation, right? So, I do think that, the market and LMI, it is what it is, and you kind of just have to roll with those punches if you want to get into a home.
Yeah.
So.
Yeah. I think that's great advice. Yeah. From if you're looking at it from outside, I think that's perfect.
Yeah, and look, whether it's specific reasons of upgrade, like you might have made money on your $600,000 house, you bought it at 400, but if your next move is $1 million, you're not going to have that. Like it's just the cost because stamp duty is not going anywhere. Like that is it's a moneymaker.
Absolute cash cow. Sydney tried to change a little bit of it, and they got rid of that pretty quickly as well. Yeah. So what are you, not going to hold it to you, but I guess this is going to go out there anyway. What are you thinking? Interest rate cuts is obviously on the tip of everyone's tongue. It has been since January last year, and so everyone's been hoping desperately for a movement in that space. What are you seeing for 2025?
So I was thinking it was going to be May, but this year, the first cut, but it might have been moved up from the way I'm reading things now. May, I think 2025, two cuts. That'd be my guess. 2 cuts.
This is being recorded on the 30th of January as well. So.
Right. Okay. Okay.
So just if anyone's listening to it in 2 weeks' time and there's already a rate cut.
Yeah. No, that would be my guess. I really want to say 3 for, my clients and people trying to get into homes. Yeah. But then I also worry about if rates cut, more people come to market and there's still no stock, probably going up. Yeah. Like, it's supply and demand. Like, so then they go, it's still getting expensive. I go, yeah, but I'm a homeowner. It's great. So it's everyone, and that's what you really need to, as a mortgage broker, I feel anyway, is try and empower your clients with knowledge and go, okay, well, it's great that you think that it's expensive, but once you own, you'll be on the other side. So it's education. People, banks prey on complacency. So the more they're educated and in their mortgage and know what's going on, the quicker they'll get rid of debt and make good decisions about their life and wealth and all that kind of stuff.
And there's obviously so much information out there.
Yeah.
And I'm getting a few of them recently, especially because they've been told that they can pay off their home in 7 years.
Oh, that guy, we
all know.
Yeah.
And I know there's probably a few of them. There's one in particular.
There's big income you need for that kind of stuff these days. So, yeah.
Big income.
Yeah.
You would no doubt be helping people with how to pay off their home loan, using offsets, paying extra, all that sort of stuff. What do you say to people that would come to you and say, hey, can I pay this off in 7 years?
Yeah. If they asked me and I said, and I'd go, no, you can't. Like, it's just physically impossible. Like,
because I can't.
Absolutely. So, like, there's some people can. But as I tell everyone, I'll go, okay, well, yeah, you could do that. But it's great to own property, but it's important to have a lifestyle while owning property, right? Like it is, you can do and I know people that live like, the Scott Pape way, right? With the Barefoot Investor, like he is king and God, and it works for people, right? Yeah. But that's not me. Yeah. Like I spend money like it's, I've got a 3-year-old. Like if I want to go to Bounce on a Wednesday, I go to Bounce. Like, and I'm getting chips.
And then I'll go Thursday and Friday.
So you can, I get it. And people, people come and be disruptors and say you can do all these things. And sure, some people can, but realistically people don't, right? Unless you are strict and strategic and, property's a long game. Like a long game, the average, 7 to 10 years you're in a home. So the 30 years that you and I talk about with a customer is not in that home. Yeah. Like, people are going to make moves. people have families, people get divorced. Like these things happen. Like you just got to roll with the punches. It's like LMI. It is what it is. Yeah. So you can only make the decision. It might be a right one or a wrong one. But look, in Australia, property is secure. I don't do shares. Crypto to me, I start reading and then I go,
I don't get it.
Yeah, I like bricks and mortar, right? Yeah. Bricks and mortar. I know what it is. The land's going to go up. The house is going to devalue. Simple. Yeah. 10 years time, it might go up, right?
Yeah.
But like even the house that we owned in Inaloo, I bought that and we made like 70 grand off it in 10 years. If I had held it for 2 more years, I would have made 300 grand. So, it's, swings and roundabouts.
You're not the type of person that would come out and tell people about how good you are as a broker, but sometimes, but you've been up there in the top best residential brokers for a number of years. Why do you think that is? What would set you apart? Like what sets you apart from others?
Yeah. Look, I've been doing it a long time, so it's just second nature to me. Like I could talk to you till I was blue in the face about mortgages. Most of my friends just call me about mortgages these days. So it's I've been doing it a long time, but it's a team. Like I've been very fortunate to grow with assistants and staff that are just proactive rather than reactive, and that is if you've got a good team behind you, the volume thing and writing volume, but also keeping up the level of service. That's where there can be a disconnect. You can go write millions upon millions, and if you're not servicing your clients on the back end and through the process, you're just basically a chop shop. So it is purely based on how I've been able to grow the team and then allowed them to run their own shows. And I'm a good leader, terrible manager probably, but they are they write their own day. Like I couldn't tell you what they're doing right now, which is what I like. I don't micromanage. I'd be terrible at it. Those kind of conversations to me, if they have a problem, they can come to me, and if I have an outcome, they will come to me if they can't get to the outcome without coming to me. Like that kind of thing.
Yeah. It's how many people within the business? What's the
4 assistants. They are just process machines. They are well-oiled machine. Deb, Denise, Kelly, Jamie's just started with me this year. They're unbelievable. So and then I got Matt that works with me a bit as a broker, but he runs his own show as well. So,
yeah. You must look back on it, and I'll talk to you about what being proud looks like for you. But you must look back and go, geez, this has been a pretty good ride.
Yeah. Oh, look, the first 9 years I was with a guy that, I learned a lot. Like, as a broker, like even after, like I listen to everything, right? You got to be a sponge, because I will pick things from people, and I'm really good at taking things I like and then regurgitating it in my own manner. Like when I started was 05, so pre-GFC, the cowboy days. And these guys were machines, but they were all low doc, no doc. And it was just a different time to get loans approved. Yeah. A lot of these guys aren't in the industry anymore, but they taught me a lot because it was pure sales. Like now it's more about understanding policy. I write policy rather than rate because people understand that as I explain why. Whereas then it was, there was a guy that he was so hard-nosed, like he'd go in there and tell him and he'd be gruff. And I'm like, how is this guy doing? But he just was really knowledgeable. Yeah. So I'd go take something from that and being, confident. Then there was another guy, and he would take, like, he'd have toys for the kids, because this was all back in the kitchen table days, right? Yeah. He would have pig ears in his bag. So if there was a dog, the dog would love him. If the dog loves you, right? So stuff like the pure, like different sales techniques. Like, and, when I started, I was 22, 21. And it's hard to tell a family of 4, mum and dad, 2 kids, when you're 21 who don't have your own mortgage, how to do your mortgage. So you really get salesy quick. Yeah. And as I think I was telling you earlier, as I was saying earlier, people are going to like my style or they don't. If they don't like it, I'm very direct, very confident. My staff at the other end, like, oh, how's this? How's that? And, I go, which is great. So it's a real happy medium. But from my point of view, I've found after a long time of doing it. People want that directness, that confidence, and go, this is what's going to happen. This is how it's going to happen. If you don't do this, good luck.
Yeah.
And people respect that.
Yeah, and they gravitate towards it as well. I certainly remember in my early years, you were trying to appease and you're trying to
get everything.
And here's all your options. You choose which one.
Yeah.
And then over time, you gradually say, this is actually the option.
Yeah. Don't mess around.
Don't mess around.
Yeah.
What would you do? Oh, that's what I'll do.
Yeah, and I'm a big seller of convenience. Like if I've got a client that's with Bankwest, I think Bankwest, their accounts don't need to change. Yeah. I'll give them the option if there's cheaper ones. But people go, what would you do? I go, well, I'm with Commonwealth Bank 30 years. Like I wouldn't change.
You're a Dolomite kid.
Yeah, I am a Dolomite kid, and so. This is not brought to you by Commonwealth Bank, but I'm just telling you my story, right?
So what you've seen so many people, you've helped so many people over the years. What are 3 common mistakes or questions, but more mistakes that people make that could be avoided, or if they knew something else, could have been done better?
I think the big one that you mentioned is the 20% thing. Like, that's one. You don't need to have that amount. Like there's ways around it, guarantees, home guarantee schemes, all those kind of things. Brokers charging commissions, charging fees. I don't do that. Some people do. The banks pay us. Things change from time to time, but it is what it is. Yeah. But my probably biggest one is, if I could give any advice, it's about how to deal with the agent through that buying process. That education piece is just the biggest part for my customers. Like they are glued to when I scribble a lot on a sheet, but they are glued to that because that is it. Like the money I've dealt with, like it's dealt with. Like don't worry about it. You're getting that money. The money's coming. Yeah. It's just how do they, that misconception of, this, or, the agent told me that. No, just ask the question. All they can do is say no. It's, for example, people that are living with family members at the time, right? It's about giving that piece of education and go, all right, we're going to get you approved in 21 days, 14 days. The seller's going to know that they've got it. They may not have found somewhere yet. So why don't you ask if it's beneficial for you to give them 90 days on the settlement? They then get 3 months to go find something. They know how much cash they've got. For you, it doesn't matter. You're at home. Yeah. So, and it's about getting that kind of confidence up there. And that is probably the misconception where they just think whatever the agent says, that's what it has to be. It doesn't have to be that way.
It's always negotiable.
Everything. Because all they can do is say no. Yeah. But it is hard. Like, a lot of people, unless you have a certain personality, aren't confrontational. They don't want to ask, or they don't want to, sound greedy. But at the end of the day, it's money that you could keep, or, negotiate, or whatever it might be.
Or be in the home that you want to be in.
Exactly. Yeah. Exactly.
We've covered off a fair bit today. And as you said, the best part about talking and listening is just pulling bits and pieces out. Or you realize that what you're saying is also exactly what you're saying. Yeah. I find that quite funny as well. But if we were to kind of cap everything off, what would be, as you've said, you've had a long career in this industry. What's something, multiple things, or one thing? What are you most proud of? Because you've helped so many people achieve their dreams, and that it's funny when you say that because it sounds a bit corny, but the reality is you have. Yeah. And there would be hundreds of thousands of people that you've helped with that. What are you most proud of?
I wish it was hundreds of thousands, but thousands.
Hundreds or thousands.
Yeah, thousands. Look, I think, we mentioned it earlier. Being able to have a client call me, there's 2 calls I really enjoy making that everyone does in our industry, is the finance approval and the settlement. And having clients, like you become used to it. Like you've got a client, you call them on settlement, and all you hear is the echo because they're in the house. And you just go, you in there? And they go, how did you know? I go, trust me, I know. And, it's that echo, and they're just chuffed. And that is a great thing. I'm really proud of my team. Like, we've won awards, and in the early days, the awards were great. Like, gets your name up, you get your medals, and you get to win. It's great for the banner and marketing and all that stuff. One thing I'm probably proud of now is colleague and industry recognition. That's a thing for me. Like that's a real driver, because I like to be respected in my field. I don't, whether I write more than you or not, I just like having that, being able to chat with someone like yourself that's doing really well and just go, look, can we bounce ideas and all that? But probably the other big one, besides the team who are amazing, is 20 years in, I still get a buzz doing it every day. Like, I love that. And there's not many, that to me, I'm really proud of, because people burn out in our industry or get fed up with banks or fed up with customers, asking questions, but the customers are everything, right? So you can't get fed up with that. You can get fed up with banks, but that's what I'm probably, I still got, 20 years in, I see myself still doing it in 20. Like, that is, and creating a business that allows me to want to do that is probably, where I'm at.
Yeah.
So.
You're, I love what you do in the industry. I think you're fantastic for the industry. And no doubt you'll continue to share your knowledge with more brokers and people, obviously, clients over the time. Thank you so much for coming in. I know it's probably a bit weird for people to hear a mortgage broker interviewing a mortgage broker. Yeah. It's probably not the done thing, but I know that what you have to say and all your knowledge and experience is worth listening to. So thank you.
Pleasure, mate. Whatever you need.
Thanks. Thank you so much for listening and being a part of our community at That Backyard Property Podcast. We would love it if you could like, comment, or even share with a family member or a friend that might get something useful from today's episode. We can't wait to see you again next Tuesday.